Welcome back. A few years back, Anton Tagliaferro was hailed as a master of the market. So what does the founder of Investors Mutual think of this market right now, and how is he investing right now? Anton joins me at the desk. How are you, Anton?
Good, thanks, Pete.
Now, you're always very measured in your analysis of a market. We went down on Glencore Tuesday, got to about, what, 4, 9, 16 or something. And then we've come back. The 5,300 level is ahead of it, and you don't really worry about those levels anyway. But where do you think we're going to go from here to the end of the year?
Look, again, I'm going to say it's tough. It's a tough one to call. I think, you know, again, if you look at the components of the market, the banks obviously have raised a lot of equity, which is diluted for their earnings, you know, so it's hard to see them run away in the short term. The resource sector, I think, is going to be in the doldrums for a while. So
big movers for the index.
Pardon?
They're all big movers for the index.
They're 60% of the index. So, you know, and then you look at all the other stocks, and yeah, look, they're fairly priced. So I don't think we're going to see much upside from here.
Yeah. Okay. So if you try to work out the big drivers for you either to like companies or not like companies, what are the big drivers, and how are you viewing them right now? Like, I'm thinking economic growth for the Australian economy must be a big driver. What's your view on that, for example? Yeah,
look, Peter, again, it's economic growth can mask what's really happening in the economy, and I think for a long time we had good growth in Australia, but a lot of it was coming out of the mining industry. Today, the mining industry's in a downturn, and we're getting growth from areas such as construction.
I'm hoping you say, therefore, there are some sectors that could actually help this market go higher.
Well, I think, you know, if you look at the economy, I think the Australian economy is doing relatively well. When you look at other economies around the world that rely on commodity prices, if you look at Brazil, which has had its debt cut to junk bonds, you look at Russia, which is, you know, the ruble has halved, and the economy is in recession, and Australia is actually holding up relatively well, I think. So, you know, I think obviously the cut in interest rates by the RBA has engineered a recovery on the east coast of Australia in things like construction and retail's, you know, retail's quite helpful.
So are you happy about what you're seeing with retail now?
Pete, look, again, it's a very competitive area. We're trying to look for companies. We like to look for companies with strong competitive advantage, recurring earnings, good management, that can grow in the long term, but at a reasonable price. And it's slim pickings at the moment.
Well, I know probably a few weeks or months ago, you were talking about shopping centres, Australasia. Had a bad day today, but that's a company that you actually like, isn't it?
I didn't actually see what happened today. I don't watch it that closely, Pete.
No, actually, it was one of the big movers down today. But
well, it may have been down a couple of cents, but it's held up relatively well in what's been a very
I'm not saying that your observation is wrong, but I'm saying, tell us why you like that company.
Well, again, what does the world look like in the next 6 to 12 months? Obviously, it's slowing. You know, parts of the world that were doing well, like China, have got issues. Those other emerging economies, you know, Brazil, Russia, etc., they're all struggling a little bit. So it means to us that interest rates aren't going to go up anywhere in a hurry, which means that if you can find stocks with a secure yield and a bit of growth, they'll probably do reasonably well, you know, in what's going to be an environment where it's going to be quite tough to find growth.
And that's a company that you think fits that bill?
Well, it's, you know, on a 6% yield, it's got 20-year leases with Woolworths, it's got rental growth of around 1 to 2%, with more to come, so yeah, it's again...
Well, you mentioned Woolworths, and I know you have a...
Holding?
Yeah, a holding, but you also have a view on its future as well. So share it with us.
Look, I think it's a good company. It's going to be around for a long time. It has a number of issues. Some of those are reflected in the price. Clearly, they've got to make a number of key decisions in the next 6 to 12 months. Not least of all is finding a new CEO. And then, of course, they've got to decide what to do with Masters. They've got to somehow try and decide what they're going to do with Big W. And on top of that, you know, they've got this huge segment called the supermarket division, which has got competitive issues with Aldi and Coles. So it's got a number of issues. It's a good company. It's not going to go away. But I don't think, again, it's going to take time to turn around.
Okay. Was it this year that QVE was listed as a listed investment company?
Last year, this time. It was a year, yeah.
Time does fly, doesn't it?
It does.
So how's it going?
It's going well. Look, we took our time to invest the portfolio.
What's the theme for people so they can understand?
Well, it's an X20 portfolio. So the whole theme is obviously most people know, many people have got self-managed super funds.
Yeah.
A lot of those people are buying, things like the banks, like Woolworths,
Yeah.
like Telstra, BHP.
Yeah.
And what we're saying is if you buy QVE, you get exposure of stocks outside the top 20,
Yeah, yeah.
where there's a much bigger diversity and variety
Yeah,
of
and
stocks.
if people don't feel as though they're in a position to analyse those sorts of companies, that's the kind of thing that your
Yeah,
team
because
does.
it's a huge population of stocks, variable quality.
Yeah.
And, we're trying to look for about 40 to 50 X20 stocks, which we think look good for the next few years.
Yeah, and the bottom line is that a lot of this growth of the stock market has come out of the top 20. Your view is that there are a lot of companies down there that have potential on the outside.
Well, actually, interestingly, in the last 12 months, the top 20 has fallen more than the X20
Yeah,
because
that's
obviously
true.
the resource sector and the banks have come off. But as I said, in the X20, you get a lot more variety, you get packaging companies, more health.
Away from it. And he said, I was very inspired by what I heard, and I have a more optimistic view on the Australian economy after going to that dinner. And he actually put the challenge to me. He said, ask the CEOs that come on your show, what are they going to do to achieve growth for their individual companies? Now, you're the CEO of Investors Mutual. You employ people. So what are you going to do for your company going forward for the next year to ensure that you get growth? Good question.
Look,
I'm sure you got an answer to it.
Question. The truth is, most of our revenue depends on the level of the stock market, so to some extent, it's out of our control. But I think, like most companies in Australia, we're going to keep doing what we do well.
Yeah.
If there's opportunities, to expand, we'll look at them. If you look. For most companies, and I'm talking now not just Investors Mutual, it is hard to find that growth. If you look at revenues in the last reporting season, there's not a lot of growth in sales.
Yeah.
A lot of the growth has come from cost cutting. I don't think that's going to change. So it's looking for companies. I think I've said this before, who can grow either by growing their market share, which actually Investors Mutual is, because we do
Well, QVE was an innovation that you put to the market.
So you've got to look for ways of growing your market share. You've got to look at bolt-on acquisitions, which some companies are doing, like Pact Group, etc. You've got to look for companies that have got locked-in growth, like Shopping Centres Australia. So I think that's where the growth is. I don't think that's changed since we've been talking in the last 6 to 12 months, and I can't see that changing. The good news is that interest rates will stay low, and I think that'll support the stock market. The bad news is there's not a lot of earnings growth, or there's very few companies that can have good, solid, earnings growth in the next 6 to 12 months.
Well, I think it's important that leaders like you actually talk about the good news more than the bad news. Good to see you, Anton.
Thanks, Pete.
That's Anton Tagliaferro from Investors Mutual and also QVE.